If last week felt fast, messy and slightly uncomfortable, good, that's what a market repricing feels like before it shows up neatly in textbooks. This wasn't a panic week, it wasn't a breakout week either. It was a rotation and repricing week, the kind that separates reactive traders from patient ones. So let's walk through what actually mattered, what moved price and what traders should be thinking about as we head into a high-risk week ahead. On the surface, markets looked fairly calm, US indices closed mixed, volatility crept higher, commodities whipsawed, crypto cooled off. Nothing dramatic at first glance, but under the bonnet there was plenty going on. Large cap indices held together reasonably well, but small caps lagged. To understand last week, you have to look past the candles and into the narrative. Several powerful themes collided at once: central banks, politics, crowded trades and geopolitics. First, central banks met politics and politics won. The Federal Reserve held rates steady, exactly as markets expected, but attention quickly shifted away from the decision itself. Late in the week, headlines around Donald Trump's intention to nominate Kevin Warsh as the next Fed chair rattled markets. The key point wasn't certainty, it was possibility. Next, precious metals reminded everyone how crowded trades really end. Gold and silver didn't just fall, they unwound violently. Oil, meanwhile, reminded everyone that it trades headlines. Crude moved higher on renewed Middle East and Iran-related supply concerns. Demand didn't suddenly surge. Equities told one of the most important stories of the week. At index level, things looked calm. Underneath, very selective moves told a very different story. Microsoft sold off hard after earnings, with guidance failing to impress at elevated valuations. Meta surged on strong results and a confident outlook. Crypto cooled as liquidity tightened. Bitcoin and major altcoins drifted lower into month end. No dramatic headlines, no panic selling. That brings us to the theme of the week. Narratives are driving markets again. This week wasn't about one data point or one earnings report. Looking ahead, this is not a week to switch off. Next week delivers a concentrated dose of market moving risk. US ISM data and the US jobs report will heavily influence rate expectations. Before you trade, a few risk notes worth keeping front of mind. Political headlines can invalidate technical bias in seconds. Expanded ranges mean position sizing matters more than perfect entries. Last week rewarded traders who stayed flexible and punished those married to a narrative. That's not a warning, that's the market doing its job. Stay process driven, stay patient, and remember, boring, repeatable decisions beat emotional brilliance every time. CLiK Trading Education,